Hello traders, in this video we're going to be taking a quick look at market structure. So you've probably heard this term used many times before, but if you're not aware of what exactly it is and you haven't really looked into this term, then this video is really for you. We're going to be taking a very quick look into this and how you can learn to identify what market structure a market is in and when you may be getting these changes of market structure to know what trades you want to be taking. Okay, so this is based off of the concept that at any one stage, a market, no matter what kind of market it is, no matter what time frame you're looking at, is going to be in one of three states. Okay, you're either looking at an uptrend, a range, or a downtrend. So first of all, let's have a look here at our uptrend. Now this is categorized by higher highs and higher lows. So if you see a market that is moving up in price like this, you can see here your higher highs, your higher lows, your higher highs, higher lows, higher highs. That will be an uptrend. Okay, this is also called bullish. So if you hear a market being in a bullish trend or the market is bullish, it basically means that prices in an uptrend, it is moving to higher prices. On the opposite hand side of this, you do have your downtrend here. Now this, as I said, is the opposite. This is categorized by lower lows and lower highs. So you can see price moving down, you create a low, a lower high, a lower low, a lower high, and so on. Now this is called a bearish trend. Okay, so if the market is bearish, you are looking at decreasing prices, prices just continually going down. Now, right in the middle of that, and this is actually what you get probably about 70–80% of the time within the market, is you have a range. Now, this is categorized by these equal highs or lows or this sideways price action. Now, in theory, that sounds relatively simple, okay? You're looking at price just moving to the same price above and below. However, in reality, you often do get these little moves and a range can kind of be these little shaky things that don't make all that much sense, but you're still looking at zones with these equal highs and equal lows on them. And that's just a sideways market, a lot of people calling it chop or whatever else you do want to call that. Okay, so those are the three main states that a market is in. Now, how do you actually know how to trade these and how can you look to whether you want to be getting into long positions or short positions? Okay. So we're just going to have a look here at some important rules, first of all, within market structure itself. So market structure can vary across different time frames. You can have bullish market structure on the daily, but bearish market structure on a 1 hour chart. So let's say, for example, you're looking on the daily time frame and price seems to be moving up in a pretty orderly fashion like this. But what you often get, again, in reality, is you get moves that are much more like this, much more choppy. Okay, so you may have this uptrend on the daily time frame, but the hourly could be moving in a downtrend. And then you have a move up, and then you come down, you have a move up, you come down, and something a little bit like that. Now, again, this is very important to be aware of because you don't want to be taking trades on a time frame that you're not aware of. For example, again, if you want to take a trade and you're expecting that to last a number of days, you don't want to be taking that trade off of like a 5-minute chart, for example, because you've got to be aware of the time frame that you're trading. So the higher the time frame, the more important the structure. So do not expect a change of market structure on the 5-minute chart to roll over onto the 4-hour chart. So once again, if you have this uptrend nicely kind of following on the 4-hour chart and you notice a 5-minute change of market structure, you're not necessarily going to expect that to reverse it, okay? Once you come into an area of support, again on the 4-hour chart, you would look for that 5-minute time frame to kind of be taken over by the larger time frames and for the bigger trend to continue. However, and this is one major point, if you do get a large time frame change of market structure, it almost always starts on those lower time frames. And this is something that I like to do personally. Okay, I do like to trade the real kind of meat in the market, that kind of the heartbeat of the market, those low time frames, in order to understand where the market's going at any time, basically. So it is important, and this being kind of more of an advanced level, if you can start to notice those changes of market structure on the low time frames and they start to roll over onto the higher time frames, that can give you a really good indication of, okay, well, usually you wouldn't expect this change of market structure. However, you're seeing this rolling over impact, you're seeing a very big change of behavior overall. And often these large time frame changes in market structure do start on those lower time frames. Okay, so we're just going to have a look finally at some ways in which you can trade this. And these are all things that I've posted in other videos, so do take a look at those videos. It's really trying to kind of tie together a lot of stuff that we've previously mentioned and tie it together with this market structure concept. So how to identify support and resistance in a trending move. So if you're trading with the trend, things that I often like to look at are your Fibonacci retracements, your points of control, sometimes your moving averages, and then sometimes your continuation patterns. Okay, so again, we do have videos with this in the Learn to Trade series and on and the Beginners series that you can look at these concepts in more detail, and you can start to put that together with market structure. Okay, then what we're looking at is how to identify a range. Okay, and on this you are kind of looking for things like your swing failure patterns or your high time frame support and resistance on this. So this isn't actually trading with the trend. But on these are the kind of things that you're looking at to help you, if you can identify a trade, a range, the swing failure patterns and the high time frame support and resistance become really quite important on these ranges. Okay, and finally, if you are looking to identify a change of market structure, you're looking for things like your Trident and Quasimodo patterns. Again, we do have a video on that, and also your reversal patterns, which is in the Learn to Trade series as well. So what we're just going to quickly do is take a look at some charts and just start to piece this together. Okay, so here on Bitcoin is a chart, okay, and we can see here that Bitcoin back here being in this nice healthy uptrend categorized by highs, lows, higher high, higher low, higher high, higher low, higher high, higher low, higher high, and then of course when you're on the kind of larger time frame, so you do have a high, a low, a higher high, a higher low, a higher high, a higher low, this trend continuing. And you can see here, quite interestingly, how your moving averages, in this case, what we're looking at as just being a 200-day EMA, something that you can use within your trading to kind of know whereabouts price is in relation to a big trending move. And you have your Fibonacci levels on this as well here, okay? So we can see how price came into, or within this trend, you have a move up. Price comes into your 618 region, a very common Fibonacci level, and around that 200-day moving average, and continues there, okay? And you can see another bounce from this. Now, what you then get, quite importantly, is if you're looking more in towards this kind of area up here, it starts to, like, whereas you've been very kind of nicely moving along, finding support on these moving averages and your golden pocket region here, you then have quite a big change of market structure and a big change of sentiment here. So you can see how price takes out this little low. Okay, you start to chop around, you lose some moving averages, and then what happens? You get continuation down, which takes out this low here. So you have your market structure here of high, low, higher high, higher low, higher high. That gets changed. What happens afterwards? You come in to resistance, this being basically the flip of what this was as support. It acts as resistance, and you start to initiate a downtrend. Now within the top of this, you also put in a range here. So on the lower time frames, you're looking, again, if you zoom in, you start to see these highs, these lows, not really being that different in price, okay? All within kind of 1% or 2 from each other, okay? So categorized by those relatively equal highs and lows on the chart before, of course, initiating another downtrend lower. Okay, so that just shows a quick example on the chart of Bitcoin earlier in the year from those higher timeframes where you can look for those changes of market structure. Now, another example that we do have here, again, just using this 618 Fibonacci, that golden pocket region as an example, you can see a downtrend where you have a high, a low, a lower high, a lower low. At this point, going in once again here for your lower high. But then what happens? You start to form this range, these equal highs, these equal lows, okay? Very much equal lows. And then you flip the trend to turn bullish. So once again, you can see a trend forms into a range and then it flips it to reverse that trend. Now, the other thing you can do is just have a look at some of the much lower time frames. And you can once again just see how this often change of market structure can lead to quite major changes of behavior within the market. Okay, so let's have a look at just here. Okay, you have an uptrend. So you have price going up, high, low, higher high, higher low, higher high, higher low, higher high. At this point, you change your market structure. What happens? You form a range, and then you go into this area where you come up, you make a lower high, you make a lower low, you make a lower high, you make a lower low, for example. Okay, so that's just a few examples to get used to this. But yeah, again, much more information on this within kind of the other videos that we have within the YouTube and everything. I do hope you enjoyed this video, and yeah, I'll catch you in the next one. Cheers, bye.